Okay, so let me just try to make sure I understood the question. So you're saying that what do I do after I identify some stock through a 13F? Okay, so the research process, you're saying. Yeah. Okay. So basically, the first question I ask myself is, you know, is this company within my circle of competence or not? That's the first question. And a lot of things are not within my circle of competence. So typically, every time I look at Seth Klarman's 13F, the Baupos Fund. Uh, Basically, I see a lot of pharmaceutical companies on it, and I have no idea, what they're all about or why those companies are even on there. So they're a quick pass. So many businesses are like that, where I cannot understand um, much about them, and such. They are immediately excluded. Then usually, if a business is of some interest, one of the first things I do is I look at the quick valuation metrics. In general, the absolute lowest um, returns I'm looking for is it needs to be at least be 50% off intrinsic value. So it needs to be at least half off. So there are many investors who will buy something for $13 if it's worth $18 or $19. And to me, that's an automatic pass, because if I'm buying something for 13, I should be convinced that if not immediately, at least in the next couple of years, it's worth at least mid-20s. And so valuation usually are one of the most common reason for excluding something after circle of competence. Now, if we get past the circle of competence, or something is things that I think I can understand, and also something appears to be somewhat cheap, then the process I use is designed to basically get to a no as quickly as possible. So I will spend about a minute or two looking at the business, just looking at some metrics or quick data, to try to see a clear-cut reason to say no. If I don't get to that in the first couple of minutes, then I'll give it another 15 minutes and I'll go through a little bit more data. So I might open up the website of the business, look at a investor relation public presentation or something, try to understand what the company is saying its prospects are, and so on and so forth, and see if at the end of that 10-minute or 15-minute exercise, if it can safely be passed on for some good reasons. And if I cannot get to that point, then the next step will obviously be to start doing a little further drill down, start printing off the annual reports, 10Qs, 10Ks, and I might spend a few hours looking at the business, again, trying to understand why it would be good and smart to reject it. And if I get past the next few hours and it's still not rejected, then I'll start doing a more thorough drill down, and that might take a few days. And if it's still not rejected after that, then we'll run the checklist, see what kind of information that pops up. Usually, the checklist brings up things that I don't know about the business, which is the biggest value it adds, and that might lead to more research and such. So it's a process of elimination, and eventually, you hopefully get to the point where kind of 7 ducks line up in a row. It looks like a good fit, and you can pull the trigger.